Hey, what's up traders? Welcome to daily Forex analysis for 19th of February 2020. Today we're going to be analyzing US dollar against Swiss franc, Canadian dollar against Japanese yen, and Australian dollar against New Zealand dollar. We're going to be also checking what are the news coming out for today and how if that might impact on the market. Also, don't forget to subscribe. I'm making daily and weekly market analysis as well as videos how to improve trading. And we are starting off with the US dollar against Swiss franc. This is a daily chart, and as you can see, trend is nicely up. It's been going up for the last 2 weeks, and now it's having a bit of a resistance on these highs. So it stopped here, and I think it will break it at some point, but I'm waiting for some kind of retracement before it will go higher. So as you can see, I have this marker down here that it will make sound basically when it's gonna come down. And for here, let's check out the 4 hourly first. You still have this steep trend line up. So if we go to these 1 hourly charts, I'm waiting this to retrace at least to this daily pivot. So I'll give it the first try, and then if it's still going down, then I will be looking to it to stop in here about 98.14 area, which you got this low, the 1 hourly low. So these two areas, first is gonna be this daily pivot, which is sitting at currently 98 from 98.22, and if it starts to plot down, then I will be looking at 98.14. Obviously, if this breaks and continues to go down, then depends on the candles. If it's a nice bearish bar, I would more likely to wait and see what's gonna happen. And if this is another low down here, and certainly if this breaks this low, then I'll be waiting what it's gonna do next. And as of the targets concerned, we would be looking for this weekly R2 around this area 98 to 70 to 74. You got this weekly R2, it's around also these highs, which is as of the daily, it's around, let me just bring the drawer and it will be better to draw tool. So these highs around this area, and you got basically these lows, this low, this low. So you get multiple lows in here, so it would be a good target to look for. So that would turn out in a pip wise, if you get on, let's say up down here at 98.20, to leave it as a simplicity, 98.20 for this stop, to leave, let's say 20 pip stop max on it, and run it to what was the level again, 98.20 to 98.70. that will be a 50 pip stop. Okay, so that's more than 1 to 2 risk reward. Personally, I like taking 1 to 3 at the very minimum. So it depends. I have a specific entry and all that, but I'm not going to discuss the specific strategies depending on your strategy. But it is more than 1 to 2 is still good risk reward. Right, the next currency is Canadian dollar against Japanese yen. As you can see on a daily time frame, the trend is going up at the moment. If we go down to 4 hourly, it's been to this like choppy range up here, this tight range for these, and now it looks like it wants to break higher. So I would wait how this candle is going to close at 8 AM for in about 40 minutes UK time and see what it wants to do. So I'm going to wait the confirmation whether it wants to go up or if it's going to roll back over and go down. So this is just a waiting game for now. and either if, yeah, on the 1 hour chart it looks like it wants to go higher. So if that happens, probably wait this 4 hour candle to close and then wait a little retracement, most likely, yeah, maybe down to back to these prior highs, and then run it to, there's a multiple targets you can run it to, either run it to 83.44, around the area is a good target. Close to this daily R3 as well, so this price might even have a reaction for this daily R2 and have a little retracement, so that will be a good chance to get onto the trade. Or as of the, if you want to hold it a bit longer, oh no, actually it's the same one, 83.44 area. You also have this high, which is pretty much same as the one I showed earlier on a 4 hour time frame. So around this area, 83.44. so if you get on to roughly 83.05 and I have a tight stop, so if you get into 83.05, and then that will be too much, so 83, probably around 83.08 or 10. So let's say you get onto the 10 or 83.10 with a stop to down to 8300, that's a 10 pip stop. And if you run it to 44.45, that's 35 pips profit, which is pretty decent. 1 to 3, so risking 10 to make 35, which is good. 1 to 3.5. Yeah, it looks like it wants to break. So by the time probably I upload this video, you might be already just playing out for this setup. And our final currency is Australian dollar against New Zealand dollar. Again, start off with the daily charts, and the price is going up. I'm looking to, as of the first target, if this gives us a chance to retrace a bit. So the first target on this currency will be 104.90, and I will explain more now. So if we go to the 4 hourly chart, not 4 hourly, 1 hourly chart, I'm hoping that this currency would retrace down to, let's draw. So if it retraces a bit, oops, let's retrace it down here, comes down around these highs and this low up here. Also you got these highs, so it's a good support area. So I'm hoping if it comes down again and tests it, that it will eventually get up to these highs, so about 104.90 as a target. And if we get on to about 104.60, if we get on here and around 10 pips stop, roughly about 10 pips stop, depending on the nature of the candles. So if it comes down that it's not giving much of a not bullish, the bearish strength, then I would be definitely looking to get on to the long side for the short term. So roughly looking with a 10 pip stop for the get on to the 104.60 to stop about 104.50, 10 pips, and run it to 104.90. That's a 30 pip reward, so risking 1 to make 3, which is pretty decent. And obviously if you want to leave it and run it to even higher, there's a good possibilities for that one as well. Let me see if there is a potential for the, what's the second target? Yeah, second target, this is decent as well. 0530 area, it's pretty decent. So if you want to run it to up here, it's also good. So if you have that, what is it, 0530, 105.30, and you have a 10 pip stop and you get on to 104.60, that's a very good risk reward. That's a 1 to 7 risk reward. That's like very good. Now let's have a look at the news for today. You have news at 9:30 UK time about on pound. You got the CPI, but we haven't discussed the pound, so it shouldn't affect the currencies we have discussed. But on 1:30 PM you got the CPI on Canadian dollar. Generally, this news creates some volatility, but it should not create a major volatility, so it should be alright. You might be concerned if you take a day trade with a tight stop loss, then you might want to close the trade before this time. That's what I normally do, just in case, because if you have a tight stop and market moves against you, you might suffer a slippage, which we do not want, definitely. And next, you have at 7 PM UK time on US dollar, you got forms meeting minutes. That generally creates decent volatility, not always, depending on the speech and that. Okay guys, I hope you find this video helpful. Make sure to like, share, and don't forget to subscribe to my channel. I'm making daily and weekly Forex analysis, as well as videos how to improve your trading. So I will see you guys in the next video.